interest in interest rates. So everyone's been following interest rates all last year. We've seen what they've done, and that was really the story of last year. The question is, what happened, where it's going, what do we see? So last year, you have to remember that through quantitative easing type policies and through COVID, the government made and the Fed made our interest rates at 0.25%, 0.25. What happened was inflation went through the roof. And so what is the outshoot of that is that the Fed says we have to combat inflation at all costs and started raising rates from 0.25 all the way to most recently 4.75%. The expectation is that there's probably one or two more rates to go of about 0.25, so we'll land somewhere in the 5.25% rate, assuming that you see inflation systematically continually come down. That's basically priced into the markets today. So the question then becomes, what do you do about it besides ride it through, and where does it end, and where does it go from there? So what you do is you continually ride it through. You're starting to see sectors like the NASDAQ be rewarded after a terrible year last year, as rising interest rates generally hurt more growth-oriented companies, but there's an end in sight, they see. So what essentially you're saying is people are now risk on in that sector again. Still value play high quality names from an investing standpoint. And then when you really look at where things will land, the expectation is those kind of peak here in the next meeting or two, maybe stay there throughout the end of the year, at least to the third, fourth quarter. Then we'll probably see interest rates, assuming inflation. Inflation is the key you have to look. The Fed wants to get it close to 2%. I think once you get under 4%, you'll see them start to rejoice a little bit. But once it starts getting there, we probably, where the year ended, 4.5% to 5% rate, they call that the terminal rate, what the Fed wants to target as a healthy economy. No extra help, no extra hurt. They just go in saying, here's a fair interest rate to run a normal U.S. economy, and they are sort of targeting 4.5% to 5%. So some fits and starts for this year. January has been a good month. I think people are starting to feel some relief coming and knowing that a lot of the stuff's priced into the markets. So we'll see where it goes. But I think interest rates was really the story last year. It'll be the story by and large this year. And it's what we're keeping our eye on, inflation and interest rates. So hopefully you enjoyed this little blog, and as always, I'm Andrew Rosen, President of Diversified. Stay wealthy, stay healthy, and stay happy. Bye.